Assalamu Alaikum everyone, welcome back to another video. In this one we are looking at AMD. AMD is one of those companies that I used to own it. I traded in and out of it. I bought it, I sold it for basically higher, bought it again and sold it again. So I just want to see today if it's actually a buy, if it's a hold, if it's a sell, whatever it is. We need to look at it, financials, and see if it's actually a good business like everyone else is saying. And I also want to see if it's actually better than Intel, which is basically apparently a dying company. So we'll look at that. But before we do that, I just want to share with you quickly what's going on in the stock markets today. The stocks will open about, the US stocks that is, will open in about half an hour. And by the time they do, they will be down over 2%. The Dow Jones is down over 2%. The Nasdaq is about 1%. S&P 500 over almost 2%. The oil price is down almost 5.5%. All of this is because there's a new variant of COVID virus found in South Africa. There's a couple of countries that are shutting down. The UK have stopped all the flights from South Africa and other countries. So there's a lot going on, and because of that, there's so much panic sell today. Now, if you've been watching this, my videos in the last few months, you will know that in these kind of situations, what I like to do is buy more. So I've now added £500 into my portfolio today, and what I'm going to do is I've got a few companies that I've been eyeing on for a while that are in my portfolio. I don't think I will be adding any new positions unless there's a great opportunity out there, but I will be adding to some of the companies that I've been watching for a while. This is my actual portfolio. It's trading 212. I don't think they're accepting any new customers from the UK at the moment, but I also have Freetrade. If you sign up with my free with my link, you get actually a free share, and I get a free share as well. And normally, if it's non-Sharia compliant, I sell it and give the money away to charity. That's exactly what I like to do. Right. So just to let you know, just don't panic whatever you do today. If you see the market, just ignore it. It's a short day anyway. It's not a lot that's going on today. The trading day is very short in America. So just if you see a pull back in some of the stocks that are on your list, buy it, then leave it. Otherwise, just ignore the noise. It's just a noise, trust me. It's not worth looking at it. Right, before we look at the AMD, I just want to show you Islamically, which is one of the apps that I sometimes use. According to this website, it's Sharia compliant all around. So it business wise, from the debt, from cash, from receivables, they basically is a compliant. So just want to get that out of the way. Now AMD in the semiconductors, it is in the semiconductor sector. It currently has $190 billion valuation. And then you've got $157 per share. That's what it is right now. As you can see, last week, yesterday or day before, when the stocks were open, it was up about 5%. Today is about 1.6% down. Now it has a very high beta, so that means it's quite volatile. And then you've got PE of almost 49 there. So it's quite high. What we normally tend to look for is about anything that's below 20 in the sector. Even if it's about 30, sometimes you can buy it depending on if the company is obviously high, if it's basically a high growth company. So then you got the EPS of 3.24, and they don't pay any dividends. I think they used to pay dividends in early 90s, but I think they stopped it. So let's have a look at their financials and see if this company is actually a good buy. So from 2017, you can see $5.3 billion to right now about $14.8 billion. So that's a massive growth there. Gross profit, again, really good if you look at that. And then you've got net income of almost $4 billion. So really good, like it's going the right direction. I mean, that is a massive jump from 6.7 billion to almost doubling that price. So this is really good to see that. In terms of assets, we normally look for current asset, and then we look at current liabilities. And the difference between what we want to know is if this number is higher than this, because that means they can liquidate this $6.1 billion to pay off the debt that they have for the next 12 months, 2.4 that they have to pay. So this is how much they have to pay, and this is how much money they can liquidate that they can actually use to. Right. One of the things that I've noticed about this company is they diluting their shares, so which is not great. So you can see from 9.67 million to 1 million to 1.1 million to 1.2 million. So they actually issued more shares. That is not a good thing, but a lot of growth companies sometimes do that. Now AMD has been around for a long time. It is kind of growth company, but I don't know why they're doing that. They should be buying back their shares, not issuing more shares, in my opinion. Now you've got $2.9 billion in the bank that they can reinvest, so there's no really need to buy, to issue more shares. If we look at the statistics, okay, you can see here the PEG ratio is 1.3. So it suggests this is not that expensive, but look at the forward PE, 45. And then you've got price to book of 2.25, price to sales of 12. So it is expensive right now. But when you look at their profit margins of 26.7 billion to present, and you look at their return on equity, 72%, that is very, very high. And finally, the final thing I want to show you is the current ratio. Current ratio basically tells us if the company is in debt or not. So anything above basically 1 is great. So right now it's about 2.2. So they have enough money to pay off their debt, basically they pay off their debt if they need to. Now we just need to look at the analysis. So what the analysts are predicting. So in terms of earnings per share, you can see that it's actually heading the right direction. It's really good to see that 2.63 to 3.33 in 2022. And then when you look at their sales growth, this is absolutely amazing. So this year, 2020, we'll be expecting 65%. And then next year, so this is revenue estimate. This is just estimation, right? And then again, for the following year, almost 19%. Is really good, and probably this is why basically a lot of investors are betting on this company and paying it for higher multiples. And then when we finally look at the current year, so in terms of growth side of it, you're looking at about 103 104% growth. Next year 27%, the next 5 years 35%. This is the reason probably a lot of investors are paying for higher price for this company because of that. Now, when you look at this again, in terms of strong buys and buys, right now it sits between buy and hold. Okay, and as you can see, there is 157 in terms of current price. And when you look at the high, basically the average price, it should be 141. So based on this, it looks like it's overvalued. When we look at Morningstar, which I have been using for a while, you can see their fair value based on their calculations is actually 109 currently, and the stock's currently trading 157. Again, it is overvalued according to this. When we look at TipRank, is actually overvalued about 10% as well. Now, there's a lot of analysts looking at this stock. So in a way, that is a good thing, okay? And this shows you that from hold to buy to hold and downside of like 20%, 18%, 4%, and so on. Now, when you look at this, basically this, it tells me this stock right now isn't a buy. Maybe if it goes down to, say, for example, the average of 140, possibly lower than that, 100, I would be comfortable buying maybe from $80 to $100 per share. And it can happen. Trust me, if you look at the history of Cisco, history of Intel in the late 90s and early 2000s, they were trading about 80s and so on. Right now, they're still trading less than $50 per share or $55 per share. So these things do happen. So sometimes the investors put a higher multiple on certain stocks because they love it so much, they forget about the valuation side of it, and then they get burnt at the end. I'm not saying that's going to happen to you, but hopefully that wouldn't happen to you. But it's really important to also think about this. Now, I'm going to show you the graph that I found this morning. So I was looking at the graph of what this company's graph and what it looks like. Look at this. What goes up like that? Look at that, from $100 per share to 100, literally hasn't dropped to once. It's currently been going up. And if you look at the last 5 years, okay, you can see it trading from $15 to right now $159 per share. Now, don't get me wrong, there's a lot, based on what we've just seen, there's a lot of value in this company, okay? They are heading the right direction, as they have got great products, as they have overtaken Intel in terms of the kind of being in the leading chip makers in the industry, okay? I don't know whether Intel is going to come back from that or not, but the most important thing for me is the valuations are too high. When you are trading basically 48 PE ratio or multiples, that's very, very high. And when you look at their price to sales and price to book as well, and look at their forward PE, again 45. When you look at the price to sales, this normally is supposed to be about 1. Right now is 12. When you look at the price to book as well, should be about 1. Some value investors say about 3 will be fine, but 25, that is very high. That is basically you paying it for a higher price. So it's one of those great companies that I have actually bought shares when it was around $80. I think it was about $60, then sold it when it got to 80, then 80 to 100, and then I stopped buying it from there because I got scared because I don't really know where it's heading. But right now, look at it, it's $157 per share. So it's a good company. It's really in the right industry. I love the semiconductor side of companies. I don't mind the fact that they don't pay basically dividends. In fact, if they were basically buying back their shares, I would have actually liked that, but they issued more shares. They don't pay any dividend. They don't actually, so you're not really making any money out of this company, because if they're buying back their shares, that means every share that's out there is now reduced and your shares are now worth more. So they're diluting your shares. They're not giving you a dividend. The price right now is too high. So I think I will just wait and maybe see if it goes down between 80 and 100, then probably we'll look into it. But obviously Nvidia, and again, is the same thing. But if you look at Intel, for example, right? I'm not saying buy Intel. Please don't get me wrong, okay? Because right now, look at the PE ratio. There's a lot of issues with Intel. If you look at when you look at their, for example, next couple of years, is all negative, okay? For the next 5 years, they're expecting about 3% growth. Again, that is really bad. That's something that you want to stay away from. And look at the average, basically the EPS, for example, earnings growth. You're looking from 5 to 0.28 to 3.7. Then when you look at the sales growth, is actually declining. So this is the kind of company you want to stay away. Even then, it says it's a hold, right? So this is what some people will call a value trap. But having said that, AMD is really expensive at the moment. It really is expensive. And Nvidia is another one that is super expensive. Look at when you look at it, look at that 100 PE, 100 multiples. Okay, again, is a great company. They give you some basically very small dividend. Their profit margins is very high. Return on equity is very good, and all of that. And then when you look at their basically analysis of next couple of years, you can see 73%. And this is probably why a lot of investors are basically putting up their bet on this, because they know they're going to make some good money in the next few years. And when you look at their sales growth, for example, from 60% to 19%, very similar to AMD. Yeah, very good companies, but overvalued. And sometimes it's very important to basically use your head and think about maybe right now is not the time. And you will find opportunities. Trust me, there might be other opportunities out there that we haven't looked at it yet. So it's not always, buying these shiny, crazy companies who basically have a higher multiples. The final thing I want to talk about is I posted a quiz, for example, a quiz or a question on the community talking about Sharia compliant, because I was looking at this website this morning, and what I've realized is there's a lot of companies, for example, Apple, Amazon, forget Apple, Google and Amazon, and Facebook or Meta. All of these companies were actually said to be a Sharia compliant, and to me that was a little bit tricky, because I've been using Zoya, and all of a sudden I looked at this and I'm like, wait a second, how are these companies Sharia compliant? So look at Google, for example, is being given basically a green, and then Amazon is a green, and you also have for Facebook that's green. So I thought, hold on a second, what is going on here? So I posed a question. Let me know what you think, because in my opinion, I'm going to do a video on this anyway, because I want to analyze these companies and look at their revenue and so on. But Let me know what you think. Because are you investing in Google? Are you investing in Amazon? And if that's the case, what is your situation? What are you what are you basing your investment on in terms of Sharia compliant? Because so far everything I've done, I've been trying to be on the safe side and stay away from companies that are even questionable. Apart from even Apple, I've sold it after it became a questionable. So yeah, just let me know what you think, inshallah. If you like this kind of content and you enjoy this type of things, please just like, subscribe, share with your family and friends. The more people that know about the channel, the better, hopefully, for all of us. And I want to create a community where we can all interact with each other and obviously help each other, because remember, the end goal is just, inshallah, to be a good investors, but obviously invest in halal stocks and halal companies and help each other, inshallah. I hope you enjoyed the video. Assalamu alaikum. Take care.